Money Show and crew for an amazing conversation today around the markets. Happy Tuesday. Let's get right into things. Turning it over to Mike Larson, my co-host here for this amazing Market Insight show.
Great. Thank you so much, Gav, and welcome everybody who's joining us for our latest, greatest Money Show and Wolf Financial Markets live stream. Really enjoyed doing these the last few months. Feedback's been great. And it's funny because when we schedule these in advance, we never know exactly what's going to be going on in the markets the day we actually meet. But considering what I'm seeing on my screen and you're seeing on yours, I know we're going to have plenty to talk about. Big story. It's no surprise. It continues to be the AI boom. You know, people want to know, is big tech borrowing and spending too much or not enough given the growth potential? And certainly over the last 24 hours, you know, we had worries about the former hammering. The South Korean Kospi index was down 10% overnight. And obviously it's very chip and semiconductor centric. You've got the tentative nature of the Middle East deal that's kind of in play. We're still figuring that out. And I think after Kevin Warsh's first Fed meeting, questions about how tight the Fed's going to be moving forward. So you throw that all together along with midterm elections coming up, and there's a lot of potential volatility, a lot of things to explore and topics to figure out. So we're going to dive into that very shortly. I do just want to say before I introduce the panelists, make sure you're all aware if you're watching this, you're going to have a chance to learn from all of them, everybody on your screen next month, live and in person. We have them all coming to the 2026 Money Show Masters Symposium Las Vegas. It runs July 19th to 22nd at Caesars Palace. They're going to be sharing their insights. They're going to be sharing their recommendations. You're going to have a chance to mix and mingle with them at receptions, book signings, maybe even poker night. I'm not sure how many of our people are going to be joining us for poker night, but we've got that planned too. Gav will put on the URL for the event. You can check it out, see what the show is all about, and lock in your pass. Or you can just go to LasVegasMMS.com. Just one last thing on that. There is early bird pricing still good. It'll save you $100, but that expires on July 1st. So if you're thinking about coming, you want to join us, I do encourage you to lock in your pass before July 1st and save yourself $100. More money for the tables, I guess, if you do that, right? With that out of the way, let's get to it. Let's talk about the panelists. We've got, in no particular order, Jeff Hirsch, Editor-in-Chief at the Stock Traders Almanac, joining again. We've got Nancy Tengler, CIO at Laffer Tengler Investments. We've got Kevin Mon, President and CIO at Hennian and Walsh Asset Management. We've got Ava Adas, I think I've got it right, COO and CIS, Chief Investment Strategist at ER Shares. And of course, we have Danielle Shea, VP of Options at Simpler Trading. They're all going to be sharing their opinions on different parts of the market that they follow. And as he noted at the outset, I also have my co-host who is going to be presenting in Las Vegas, Gav Blacksburg, CEO of Wolf Financial. He is truly a financial markets content machine. Love working with him. Gav, thank you as well.
Absolutely.
All right. Well, gentlemen, ladies, thank you for joining. I kind of want to just go around the table. I guess I'll sort of start with my top right and go around. That would be you first, Ava. Why don't you just set the stage, talk a little bit about what you do, what you're seeing in this market, and then everybody will take a couple minutes and we'll move on from there.
Okay, I'm going to speak high level. Obviously, we're all focused on the war and when that will end and when oil prices are going to come down. But at ER Shares, we have a long-term investment horizon. We invest like VCs. So to us, we take big positions, in some cases pre-IPO, and we try to keep them for the long term. So we're trying to find modes. We are looking at leadership, many qualitative and quantitative characteristics. We're looking at the culture of the company, how the companies behave, their competitive advantages. And so we transform even the qualitative characteristics into quantitative. So what we've seen, and we're very excited about, is that Q2 has demonstrated that companies are expanding their profits at a record level, and they're cutting down their SG&A costs, and all this is because of AI. So AI is a big characteristic that we're looking for companies, how they're using it, how they're expanding their numbers. Q2 was a great quarter to look at these numbers and become very excited about what the future holds for these companies.
Great. Thank you, Ava. Jeff, I want to go to you. I've had you on one or two of these, I think, in the past. You've talked a lot about seasonality. Obviously, everybody should be familiar with the Stock Traders Almanac and what your work there shows. So why don't you set the stage with where we are in this cycle? I know you've got a couple different things you're eyeing, and I'll just turn it over to you.
Thanks, Mike. Good to be with everybody. Looking forward to Vegas. It's always good to get together with all these people here and you guys at Money Show. So Stock Traders Almanac, proudly we are celebrating our 60th anniversary. I just turned 60 just about 4 weeks ago, and we are finalizing the 60th anniversary edition of 2027. Unbelievable. We've been doing this for 60 years. Hat tip to my late father, Yale Hirsch. We are in the seasonal week period here. We're just entering it. We put up a little update of the June seasonal pattern. You see the end of June, notoriously weak. Triple witching, and the week after triple witching, trouble. We do get some Russell rebalancing at the end of June, also has an impact, but that sets up what we like to call Christmas in July. The mid-year rally runs from the third to last trading day of June through the 9th trading day of July. Also bullishness a little bit ahead of the few days before July 4th holiday, a little negative after that. And that's on the backdrop of the worst 4 months of the year, that July through October period, along with the weak spot of the midterm year, the weak spot of the 4-year cycle, Q2, Q3. So I know, Mike, you and I had exchanged some notes about what's going on. We got the war worries. We've got the tech worries. I'm still AI super boom oriented for the future, but our concern is inflation as well. Yeah. Nice to see the prices at the pump around the New York area coming down. Oil, I'm kind of happy with my little oil short trade, just a little personal SCO. That's was going against me for a while now. That's positive. We're looking to exit that. But we're set up here for a week spot. Let me just get technical for 1 second. You know, we do seasonality, cycles, patterns, and trends overlaid with technical analysis, fundamentals, and monetary policy and sentiment. There's a gap back there at the April 8th ceasefire that is just clamoring to get filled. Would be a nice setup for the sweet spot of the 4-year cycle. If we get that pulled back to that gap or in that general area, maybe August, September, the usual seasonal period. Feeling a little bit of that pressure right now from what's going on the news flow and the tape and that sort of thing. So that's what we're looking at. Worst 6 months sectors, we're in the utilities and staples and bonds. We've got a basket of stocks. And at the conference, I will be talking about the AI super boom, my outlook for the next 15 years. If you remember my book that I put out in 2011, the super boom, Dow 38, 820, we hit that. A little retrospective on some of the stuff that's still working. So I'm still bullish long term, a little bearish here short term.
Yep. Sounds good, Jeff. Nancy, I want to go to you next because you've really had some great calls on not just sort of the headline AI stocks, but a lot of the names that are, you know, and the companies that are putting AI to work in their business to improve efficiency, drive profit growth, and so on. So why don't you talk a little bit about where you think we are in this cycle, some of the short-term action, and sort of frame it with what you've been talking about longer term? Okay.
Thank you, Mike. Well, I think I agree somewhat with Kevin. I'm sorry, with Jeff. Sorry. And by the way, I'm a big consumer of the Stock Traders Almanac, so there was no excuse for me for getting that wrong. But let me just put a little bit of a different spin on it. We wrote a piece on April 4th, said we thought we were at a market bottom, or at least a current market bottom. That turned out to be a decent call. The market's up pretty materially since then. And then we went to our clients and said, we want to put some protection on for the summer. So we're long-term bullish. We're a little concerned about the near term. And that's pretty typical. We've been getting summer swoons for the last 3 summers, and it's been led by tech. But I'll say a couple of things in summary, and this is probably contra to everyone else on the panel. We think that it's more likely that we'll see a negative inflation print in the coming months than continued acceleration in inflation. Oil's down, as we've all discussed. Shelter is down pretty materially. And we think that productivity is going to continue to drive disinflationary growth. So we've been on the productivity bandwagon for the last 4 years. I was managing money in the 90s. That was the theme. We had Greenspan, who understood the power of productivity-driven growth. I think Kevin Warsh is trying to hearken back to the Greenspan era. Shortest statement since Greenspan in a non-crisis Federal Reserve environment. And I think what is more likely to happen, even though there are many calling for hikes, is that what we will see is the committee will start seeing the disinflationary trend, and we won't have to hike at all. So I think it's more likely we'll see no hikes. I don't know about a cut. It's beyond my pay grade today. or today's info, but we still are long technology. Earnings in the market is growing faster than market performance. In the 95 to 99 period, we saw about 65% earnings growth, but 220% stock performance. We're in the kind of 79, 80% earnings growth, and we've seen comparable stock performance over the last 5 years. So debt, and this is the last thing I'll say, debt as a percentage of the index represented by technology actually declined last month. And so it's about 6% across all the indices. And so we're not concerned about the debt worries. We still want to be long the old economy companies that are pivoting. So thanks for the shout out, Mike, and the providers of the picks and shovels. We've been using weakness to add to those names. DeepSeek, first quarter of this year, and we may be adding some more this summer.
Got it. Sounds good. Just a reminder, anybody watching this, we do have the chat window. If you want to, throw in a question there, ask from one of our speakers. We'll be happy to address it during the hour that we're online. Kevin, I want to go over to you. Your topic for Las Vegas is actually follow the money. What are you doing in terms of the money? Should we be concerned about Fed policy? What's going to impact things for you? Where are you at with that?
Sure. I apologize for being so dressed up right now. I just actually came from an interview with Stuart Varney on Fox Business News, and how appropriate, given the sell-off we saw in tech stocks this morning, that leads right into my macro theme for the Las Vegas event of follow the money, and follow the money into places such as AI infrastructure, aerospace and defense, power solutions, and of course, biotech. But I would be remiss not to at least address today's sell-off in technology, because I believe that investors, for some reason, continue to poke at this perceived AI bubble, almost seemingly, Mike's hoping that it will burst. And I think each time we see investors poking at this bubble, they realize that the AI revolution is still in its very early innings. In fact, I would contend we're still just in batting practice, and we have a doubleheader of games ahead of us. And if Jensen Huang is correct, and there's going to be between $3 to $4 trillion spent on an AI infrastructure by the end of this decade, well, then we still have trillions more to go. So to Nancy's point, picks and shovels. Look at the data center construction companies, the electrical connectivity companies, the power solutions, the cooling solutions. And I see tremendous opportunities there ahead. How about Micron, which has sold off so much over last night? And I think some of that might have been due to at least one of its South Korean competitors, that being SK Hynix, because they're now apparently shifting to DRAM away from high bandwidth memory because they're sold out. Micron indicated that they're sold out for the balance of this year. So as a portfolio manager, that tells me that we still have more ramp ahead. But it also reminds me not to concentrate into any one area of the AI ecosystem, but rather build a diversified portfolio across it. So that's really what I'm going to focus on in Las Vegas, not just the AI infrastructure build out, but other places where investors can follow the money in terms of where money is being spent to find the best growth opportunities ahead.
Got it. You've whet my appetite for baseball. The Cubs have been rained out 2 nights in a row, so I'm kind of missing out on that. But in any event, Danielle, thank you for your patience. I want to go to you now. I mean, obviously, a lot of what you've been doing is teaching people how to use the squeeze, some options trading tactics to profit in this market, and you like to trade earnings and some of the developments there. So what are you seeing in your world, and kind of, how do you sort out activity like today where you wake up in the morning, you check your phone, and you're worried about how the day is going to go?
Well, I love it because it sets up a perfect buying opportunity for me, especially going into Christmas in July. I mean, we definitely use Stock Traders Almanac here at Simpler Trading as well. And for us, we focus a lot on short-term options trading. And so all of the catalysts surrounding earnings have been phenomenal for that, because we had such a strong earnings season last quarter. Because a lot of these new AI revolution names are just completely on fire. One of my favorite setups is primarily looking for tickers that have blown earnings out of the water and then also experienced breakaway gaps last quarter. A lot of these stocks are great for trading them going into earnings the following quarter. So I trade a lot of those on a shorter term time frame. I'm also doing just shorter term shorts in the market as well. For example, the Mag 7 This used to be an area of the market that I used to trade this strategy on. Just, you could literally just close your eyes and buy Microsoft a couple weeks before earnings and it would trade higher, right? And then 2 years ago or so, it stopped working. And at this point, I'm looking at Tesla for a short before earnings. I shorted Netflix before earnings and already took that one off yesterday. Because in the Mag 7, we are seeing a lot of downwards pressure, and especially in the software stocks. So, I have trades going in both directions right now, but I definitely agree with everyone else. And I actually agree with you, Nancy, too, that I think that inflation from the war is definitely going to slow down. So I'm not as concerned about the Fed later on in the year either. But focusing on earnings, focusing on AI stocks, Mag 7 has kind of lost its luster for me. And that's what I'm doing.
Okay, sounds good, Danielle. Just a reminder, if you're joining us, you weren't here at the top of the hour. All of these speakers you're listening to, they're going to be joining us for the Money Show Las Vegas Symposium, July 19th to 22nd. You'll see a link pop up on your screen from time to time. That's where you can read about the program, see who's going to be speaking there, and register for your pass. It is still early bird pricing for one more week, so you can save $100 on your pass by going to that website. Gav, I'm glad you're going to be out there. We'll have a chance to catch up on what you're seeing in the markets. Obviously, a lot of excitement over things like the SpaceX IPO, some of these, OpenAI and other names that might be coming public later in the year. What are you hearing? What are you seeing in the chat rooms that you're involved with? What are people, active traders talking about, and what's their sentiment in this market?
Well, you have two different types of people that I talk to mostly. You have the influencer side and the people that are kind of leading a lot of these trades and doing a lot of the education. I think that they are kind of salivating for a market like this because they love the volatility. And then you have the other side of retail who feels like their head's being ripped off once a week. And so they're kind of going back and forth trying to figure out where they should be positioned. Do they need to be more actively trading? Should they be doubling down on some of these dips and pieces? And I think it goes back, Mike, even maybe a year ago, we were having a conversation at the Money Show about AI and people saying, is this the top for AI, right? Has it run its course, right? We've run up so much. And now, of course, people are running with that notion again. And so I'm trying to tell my audience, like, hey, this is a long-term play. There's a long-term trade to be had here within these memory stocks, bandwidth, different pieces like that. Find the bottleneck. I think power is coming up next. And so for our audiences, I'm really trying to tell them, to stay invested within this market, to continue to ride with it. I really like some of what's been talked about by the panel in terms of looking for those blowout earnings, because there have been companies that have amazing earnings that have not responded well within the market. In fact, have fallen within the market. And that's where the opportunity lies in a choppy market like this. So really telling people to focus on that. Also, excited about at the Money Show, I'll be talking about using AI for your investing and for your trading. And so that's a huge rise right now. I'm teaching people how to use agentic trading, building out different AI-led funds and pieces like that. And I think that just leads back to the fact that there's huge demand for the stocks that are being able to make this possible, right? So it all kind of ties together. And that's a lot of what I'm looking at.
Got it. Sounds good. Ava, we're talking SpaceX, so I have to go to you. I mean, this is really your wheelhouse. You've been in and involved with this stock for a long time, have done a lot of research. What are your thoughts on where the company stands now? I mean, your presentation is called the SpaceX Opportunity. So what would you mind sharing on that?
We think it's the most, if not the most, one of the most consequential companies of our era, of our lifetime. So to us, this is a long-term hold. We got into it pre-IPO, and Exover has already seen a significant amount of appreciation because of SpaceX before the IPO day and after. And so what we're looking at is, like, obviously there's weakness on the price that's expected after the IPO, but we're looking forward to the indices kicking in. FTSE has already started. That's 5 to 9 billion that already has kicked in. We have MSCI kicking in on Thursday. That's going to be 5 to 10 billion. And then NASDAQ is kicking in July. That's going to be above 20 billion, we believe. And that's all passive money tracking the indices, which means there's going to be buying pressure. And so SpaceX, unlike many other IPOs in the past, will have a floor. So we don't see, we actually like the price right now. I don't want to offer a recommendation for buying, but we believe SpaceX is bottoming around here. We believe that SpaceX will be a great long-term hold for ExoVR for whoever believes not just on the space, on the rocket operator company, but also SpaceX AI, which provides the infrastructure for all these AI companies. Then you have Starlink. So it's a three-engine empire. That's how we look at it. I'm going to discuss more about this at the Money Show in Las Vegas, but we'll look at it as a three-engine empire, and each of these engines have their own mode. So that's why it becomes really an empire, and it's really hard for any other company to compete with them.
Fair enough. Ava, while I'm still with you, I do want to ask about, in general, sort of from 30,000 feet up, the fact that we're finally seeing more public opportunities to participate in the market. I mean, it's been an environment where companies have stayed private for so much longer. A lot of the values of people that were in private companies. What are your thoughts on how long this IPO boom, whatever we want to call it, can last? Is this something that has a few years of tailwinds here, or is it something that, this is probably only a 2026 story?
Mike, I would say more than a few years. I think that can be a long-term trend here, and the reason for it is that companies, for many reasons, choose to stay private for longer. It's mostly economics, and so that can be a long-term thesis. That's why we created ExoVR. We saw this change, and so because of all this market value creation happening before the IPO, we realized, and since we invest like VC, so our model actually started from on the pre-IPO side. So that's how we came up with the idea, why don't we try to get into these companies before they go public, to allow retail investors specifically to get access to these companies before they get public, and be part of all this appreciation that was only for accredited or ultra high net worth investors in the past. So we try to democratize this access because we believe that's going to be a long-term phenomenon in the future.
Great, thank you. Nancy, I want to pivot to you because you brought up sort of, some of the parallels or similarities to what happened in the 1990s. Obviously, it was a tech-driven market back then, just like it has tended to be now here in the 2020s. Your thoughts on, is there any point where supply starts overwhelming stock demand? You think that that's a story for, again, way down the road? I mean, what are your thoughts since you brought up sort of some of the 90s parallels that we have here?
Yeah, well, I don't think we're there. I mean, we've seen a contraction of available equities in the market for the reasons that Ava has mentioned, among others. And so the Wilshire 5000 is now the Wilshire 3500, I think, something close to that. And so that's not what we're worried about. If I am sitting up at night, the things I think about are, let me just say before I say that, the retail investor has played an important role in this particular bull market. The institutional investors have not. And so where the competitors for shares are share buybacks and the retail investor. And so when I worry about companies that are issuing more debt, not because they're issuing debt, but because it may take away from their repurchase of shares. Not that I'm a big fan in theory, but it has put a floor under this market. And so if we see the major technology companies stop buying back their shares, that may put downward pressure on the market. I don't think we're there because we're seeing in the shadow banking system of pension funds and insurance companies, we're seeing a tremendous demand, an insatiable demand for corporate debt. So I think the companies will continue to use cash and debt to buy back their shares, but that is certainly something that we're watching, and a similarity to the 1990s. Other than that, we had 3% average inflation in the 90s. We had a 10-year that was 7 to 8%, Fed funds rate averaged around 5. So all this hand-wringing over a 4.5% 10-year sort of makes me chuckle a little, but I think there's plenty of room for robust stock returns and a 10-year that stays in the 4 to 4.5% range. So we're very optimistic thanks to productivity. Something that no one really talks about is the tariff tailwind from the IEEPA getting struck down, and the One Big Beautiful Bill Act fueling consumer spending and corporate CapEx spending.
Got it. Gav, I want to ask you about, again, the retail investor. I mean, it is kind of ironic. The retail investor has sort of been the hero of some of these pullbacks. I mean, when we had all the tariff stuff last year and Liberation Day, retail stepped in, even as institutional seemed a little nervous, and that worked out well. Then again, you've had some of the parts of the market, crypto in particular, where retail had been very active, and obviously that sector has cooled quite a bit. That asset class has cooled quite a bit. So what are some of the conversations you have? What are your thoughts on sentiment and, where retail investor participation is going to go from here?
Definitely think you're correct. They're making up a bigger portion of the market than ever and driving more volume than ever. I've seen such a huge gravitation towards ETFs. That's been a giant area that they've gone into. I've talked with a lot of ETF managers that have, especially in the SpaceX run up with some of these SpaceX ETFs, we're seeing the most traded ETFs of all time right now in terms of volume. In advance, ETFs that were offering SPV exposure saw billions of dollars of inflows, largely much of that coming from retail. And I think that goes in line with when people actually saw. So the SpaceX IPO was 4x oversubscribed. And I believe that almost a quarter of that was retail interest within it, which is over $70 billion at that point. And so you're seeing so much interest from retail in putting their money into the market. And people keep talking about this wealth transfer that's going to happen from the boomer generation right into the younger generation. And I do think more that younger generation than ever is going to self-manage that money or use AI tools and pieces like that to help them manage it, right? You can basically build a financial advisor at this point in a matter of minutes. It can be done for you. And so I do see a lot of participation. I definitely have seen it not so much in the world of crypto. You are correct there. Not only because Bitcoin has fallen, but because the entire rest of the ecosystem is cratered, right? There's been no real returns on Ethereum for several years at this point, and et cetera, et cetera. It's much worse when you keep going down the line there. So I think people have kind of said, okay, I'm going to wait that one out. I'd rather not, even if I could buy here. And also it's just risk reward, right? Even if you bought here and it went back to all-time highs, that's about 100% gain. But people are looking at MU and SanDisk and other names, and in their heads are saying, I can get more than that, right? With less risk than I perceive in this area of Bitcoin. So I think that's where I've seen a lot of gravitation, but obviously it is very heavy right now in tech and AI. But I think Danielle really pointed out, not in the Mag 7. They've definitely lost their luster. I think they're basically flat on the last 9 months when you look at Mags, which just tracks them, evenly. So that's where I'm seeing people gravitate towards. But definitely ETFs having a huge moment here.
Got it. Kevin, how about your conversations with institutional clients and your sense for institutional sentiment here? Where do you think the big money is positioned, and how do you think they're approaching this market here?
Well, if you look at institutional money and many of the financial advisors across the country that we work with through our Smart Trust brand, you're seeing a lot of people continue to lean into AI. They clearly have a fear of missing out on this secular trend because of the returns that they've seen in certain areas of the AI ecosystem. And all the discussion around the Mag 7 is exactly why I created the Air 7 basket of stocks, to compete, or at least to show that there's a different way forward if investors want to have a technology allocation in their portfolios. Of course, the Air 7 being the AI Revolution 7. And the other panelists are correct. Year to date, coming into this week, the Mag 7 equal weighted was roughly flat for the year. You have the S&P 500, which was up roughly 10% for the year. The Air 7 basket, and I'm not patting myself on the back here, was up roughly 75% year to date equal weighted. And to be fair, I did borrow 2 names from the Mag 7, one being NVIDIA, the hub of the AI ecosystem, 2 being Alphabet for our software play. But I also added to that a company like Taiwan Semiconductor, the largest dedicated chip foundry in the world, which boasts a 70% market share, and their largest client being, shocker, NVIDIA. And I added Micron to the mix as well, because to me, Mike, the AI revolution starts and stops without power and without memory. And when you think of memory, at least as it relates to shares that trade on recognized U.S. exchanges right now, I know SK Hynix has filed for an ADR, but right now, the only game in town really is Micron. And then I added a REIT like Digital Realty to give you that data center play, Vertiv to give you the cooling side to the data centers. And then I added American Electric Power just as one utility name to help balance out the overall AI ecosystem. Why American Electric Power? Well, they supply electricity to 5 million customers today, 11 different states, including the state of Virginia, which has become the data center capital of the world. And now we pulled those 7 names from 2 of our portfolio strategies at Smart Trust that actually have over 88 names in them. But I did it to just illustrate where the opportunities exist. If you go beyond just trying to find the next NVIDIA, if you go beyond the software names and spread out your tentacles into the entire AI ecosystem. And that's really resonating right now with financial advisors and with institutional money as well, because they're not just looking for the one-hit wonder, they're looking for a more sustainable, smoother ride, Mike.
Got it. Sounds good. Danielle, your thoughts. One of the things that I keep hearing again is that it's earnings. When people are worried about the Middle East a few months ago, when people are worried about the Fed more recently, a lot, or AI bubble debate, everybody seems to go back to look. It's the earnings that are underpinning this. And since you are actively following earnings, trading earnings, what are your thoughts on the numbers we're seeing? Is it going to be enough to sustain us as we get into the back half of the year?
Oh, I absolutely think it's enough to sustain us. I actually have been developing a software platform, and basically what it does is it's looking for all of these top tickers that rally going into earnings, and I'm just finding name after name after name after name. And again, people are really focused on the Mag 7. And so it may seem like, oh, this is dragging things down, but there is so much opportunity out there. And there's so much opportunity out there, especially for retail investors and for people like me. Like the fact that I can code a software platform, you have no idea what that means, because I'm not the kind of person that can do stuff like that. But apparently I am now. Because of the capabilities that we have due to AI. So I completely think that this is just the beginnings. There are so many different tools available to the average person on top of, what institutions already have. And so, what I'm seeing in the market is that every single time the market falls, retail is in there and retail is buying every single time. I follow the put call ratio really closely. Just today, for example, it spiked up above 1 just for a very short time and immediately fell again. And that's because we have buyers coming in, and every single dip that we have seen, that is what's happened. And it's really stabilized the market. So on days like this, really, I just focus on those top relative strength names. I'm looking at a lot of chip makers right now, especially Intel, AMD going into earnings during the summer quarter. Those are 2 tickers that I've been eyeing to buy before earnings season, because if you look at both of them, they had really strong breakaway gaps last quarter. And then there are just every day, there are new AI companies that are coming into my view that I'm enjoying trading. So I don't think that we're anywhere near the top of what's happening right here. And I think at the end of the day, earnings is proving that that's the case.
Jeff, I want to get to you a question about midterms in a second, but since Danielle brought up that, incorporating AI into sort of, trading as from a tactic standpoint, from a programming of trading system standpoint, Gav, what are you, when you're having conversations with people about how to incorporate AI into their trading, what are a couple of the main use cases, the ways that AI is helping today's trader, and what kind of advice do you have for people that if they haven't taken those steps they're looking to, how they can get started?
I'm going to do a much fuller presentation on this actually at the Money Show. But a couple of the things that I'm going to cover is I do think people they're like, I understand that there's value in it, right? The AI can be my analyst for me. It can work 365 days a year, constantly, nonstop. It can be double checking my thesis. It can scan through 10,000 data points in a matter of minutes. So people understand that, but how to actually implement it. So I'm going to basically walk through multiple ways. One of the things similar to what Danielle's doing right there is I'm going to show people the different platforms, because I think that that's really one of the huge ways to use this is by finding a good platform that allows you to basically sync in your portfolio so that it can actually see what you're trying to do, what you're trying to accomplish, work with you on your goals. And then there's a variety of them. I'm going to show people how to build AI agents that can basically be doing work for you constantly, looking for CEO exits, looking for controversy, looking for insider buys, insider sells, all different types of pieces, can follow what Trump is saying to buy on the timeline, whatever it is, right? You can basically have these agents working for you in real time, providing you notifications directly to your phone. Number 2, going to show people how easy it is to actually have AI make trades for you, run agentic trading, and set up an actual agent to be doing this for you. I have one running in real time right now. It's holding a basket right now. It's got ARM, TerraWolf, XLK, LRCX, and Marvell, and it is doing completely on its own. I basically am giving it free reign. I gave it some capital to work with. I really liked how it did the first week. I actually increased its capital by 50%, and I'm just working with it. I'm going to have it start trading options soon as well. And it's really interesting to see this happen in real time. So I'm going to show people basically kind of the full gamut, right? Build your own agents, AI funds, have AI trade for you. And then also, if you just want to use it as a research analyst, here's how you can do that too.
Got it. Now, again, it's been a topic that's been increasingly, I get questions about it. A lot of our attendees, or excuse me, experts who speak on it, get a lot of questions. When they do those live demos, people are really engaged and asking a lot of pointed questions. So that's why I want to make sure I brought it up. Jeff, let me go to you. I mean, you've talked about the weak seasonality, but we do have midterms. I mean, we do have the election in November. You've talked about, I think, your Trump seasonal cycle pattern being in play. Can you explain that a little bit more for our viewers and what that's telling you about how you think the back half of this year sorts out? Oh, I think you're muted.
Check 1, 2.
Oh, there we go. Now we got you.
All right. Somebody said something about the microphone, but yeah, we talked about the Trump seasonality cycle back in I think it was Florida, Mike. You and I had a little moment about that. So again, Gav, you were just talking about listening to what Trump says with your agentic tools or whatever. So there I was it March 23rd, looking at the news on my phone. Reading the paper as I still do, even though it's on the phone apps at like 7 a.m. or something. And, back from the tariff tumble in 25, the only thing I let pop through is the Truth Social post, so we can see what's going to move the market. And there it is. We're going to pause, a 5-day pause. And I said, this guy keeps doing this every Q1. He likes to shake things up, and then the market rallies for the rest of the year. So I just ran, using my software, my seasonal pattern of the 5 years of the Trump presidency, the first term, and 25, and there is this dip. You can see it. I posted several times. You see this late Q3, early Q1 dip, and then boom, rallies for the whole year. Likes to shock in the beginning, and then rally the rest of the year. It's sort of the taco trade, even though that's become a bit over discussed, overplayed, but here we are rallying again. In the latter part of the year, Q2, Q3, heading into with this Trump seasonal cycle pattern playing out. So I don't think it's going to continue for many years to come, because I think the market's onto it, but it's still in play right now. And I think part of what we're seeing with the deal in Iran is very midterm election year behavior. We don't want to. He doesn't want to go into the midterms with the razor thin margins and prices at the pump being high and having this happen. So sets us up for this weak spot. But again, the earnings picture, like Danielle's talking about, the AI boom being early. I mean, I'm still a little skeptical. I mean, I'm using it, but I see a lot of errors come through still. I'm a big fan. I think the boom is early innings, batting practice, as Kevin said, even potentially. I've got, much bigger numbers going out. But, if you remember back in the old days of the internet, we used to call it the worldwide wait. Remember at WWW stand for that? We used to read the paper while we're waiting for dial-up or whatever it was. I'm seeing some lag in the different bots I'm using, whether it's Claude or ChatGPT or Gemini or whatever I'm looking at. Certain times of day, it just sort of freezes up. It's like kind of gummed up, or too much traffic, not enough bandwidth. So to me, that just highlights the early stages, and also to be a little careful. I'm concerned, Gav, with you letting AI trade for you. I mean, you're the man on that stuff, but I see too many errors. I've gotten bad GDP numbers. If I just ask for a little, I'd use it for research. But I'm letting it trade for me.
So two things on that, Jeff, within those pieces. One, it's pretty limited capital at this point. I'm not exactly giving it my life savings, and it only has access. it only has access to that in a specific account. Like it has its own account.
Right.
It's separate from my other accounts. It doesn't have access to that capital. Number two, absolutely agree with you. One of the big definers is going to be your data sources. And does it have real-time data that is high level and accurate? And that can be difficult unless you are paying for it. One of the things that I'm doing on the back end, we're building out like a whole app called Rallies that's around this idea of agents and trading and stuff. We already have deals with LSEG and others for their data feeds in real time. And then I actually use what's called an MCP, and I won't get too detailed into this, but I have my app's data, all the data feeds that I pay for, being pulled in to my Claude. And then that Claude is the one that is running and trading for me on the brokerage. So mine it's not just using public information. I actually have paid data feeds that are pulling in real-time information and data that it is using to trade off of. So it is really as high quality as it gets the data.
I want to talk to you about getting my data that I've triple checked for the seasonal, studies into somewhere where they can't just take it and use it and put it out there. So I have it private in-house. So I want to have it, and we do a little AI of our own. We have been querying our database, for at least a decade or more, so it's kind of like that. But yeah, we got to talk. We'll sit down and have a coffee out in Vegas and go over it.
Sounds good.
We're making progress right here online. I love it. Danielle and Kevin, this is really for either of you or both of you if you want. I mean, the other big bugaboo besides data accuracy that I hear about AI, and you see in the news more, is just budgets. I mean, companies have blown, this is what we want to spend, and they blow through it because they want their employees to use AI, and they don't realize how much this is going to cost in terms of tokens and so on. And now you're saying, I wouldn't call it a backlash, but I guess theoretically some tighter purse strings here. Is that going to be an issue for these companies going forward, and why or why not? And I guess I'll start with you, Kevin, and then Danielle, if you want to jump in.
Sure. I would say that clearly that has become a concern to many investors in terms of the billions of dollars that's being spent today with the hopes of a return tomorrow. We've seen this recent round of circular financing deal between these hyperscalers and semiconductors and chips providers. It's almost as though it's a survival of the fittest, and who can forge the next strategic partnership fastest without concerns potentially how that may affect their profitability down the road. So to me as a PM, I try and navigate around all of that noise, if you will. Yes, I want to have some exposure to some of these hyperscaler names. Yes, the software may ultimately transform society and improve the profitability of maybe many of these companies. But for now, I want to invest in those companies that are receiving all of the billions of dollars of this money. And that's why I continue to lean into these infrastructure names, at least for the time being. But I'd love to hear what Danielle has to say as well.
Yeah, Danielle, I mean, are these budgets going to get cut, or is it going to be like, you have to basically get a hall pass or something to use use your company's AI budget when you get towards the back half of the year?
Well, I'm very fortunate that at Simpler Trading, we have all been on the AI bandwagon. And actually, John Carter has successfully taught Claude Code one of his strategies, and he's using an AI bot now that is trading one of his strategies in, a separate account, as you mentioned. And so I'm working on getting mine there. I don't have it fully there yet, but, I think it's the way of the future. And yes, it is expensive, but at the same time, it is also a lot cheaper than what a software developer would cost you. I have been working with my dad for a long time, and we've wanted to basically create an earnings calendar for options traders that would specifically identify the best tickers to trade surrounding earnings, pre-earnings momentum strategies, selling premium over earnings, and then post-earnings trades. And we looked into developing it for the longest time, and it was going to cost quite a bit of money, but we've been able to do it ourselves in the past couple months for relatively cheap price. So, yes, the usage is an issue. But when you look at what it would cost for a software developer, I don't know. I just think it's the way of the future. I think there's going to be a lot of things that we could not predict. I think about my kids, and I have a 3-year-old and a 1-year-old and a 12-year-old, and I can't imagine what it's going to be like by the time they're in their 20s. But I love it. I'm going to keep using it. I think that ultimately, because the costs have gone up, people aren't losing their jobs as quickly, which is great for everyone. So
got it. Fair enough. Just a reminder again, if anybody joined this stream later, the reason we're speaking to all these experts is that they're going to be joining us at the Las Vegas Money Show Symposium we have coming up July 19th to 22nd at Caesar's Palace. Again, we're not just going to be learning, we're going to be having fun. We've got poker night, we've got receptions, we got book signings, we got podcasting, we got a little bit of everything there. You have the link on your screen. That's where you can go check out the pass options. And as a reminder, you can still save $100. Early bird pricing is still active, but only until July 1st. So I do encourage you, if you're thinking about coming, lock that in before July 1st. If I want to go back to you, fun fact, I live in South Florida, so I was actually able this morning because of the clear skies to watch the SpaceX launch from my balcony. So, able to see that. It gets me thinking about, is there going to be any competitor that can catch up to them, given the enormous head start they have? Are, the Blue Origins of the world, what have you? Is there going to be an issue for SpaceX down the road, or are they just going to be able to run away with this for the foreseeable and long-term future?
I find it very hard for a competitor to catch up with them. I think they have frog leaped the entire industry. When you convert your biggest competitor to your biggest customer, that like SpaceX is doing with Amazon Leo needed SpaceX to meet the FCC deadline. So when you manage to do it, and then you have Anthropic leasing the Colossus One. So when you're in a position that you convert your biggest competitor into your biggest customer, then you definitely have a moat. And because Elon has set up the whole supply chain and has all these companies interconnected, so you have SpaceX AI, you have Starlink, and you also have SpaceX Core, the rocket operator, and they're all interconnected. So that supply chain brings us back to the Carnegie and the Rockefeller days when they control the whole supply chain. And for their competitors to be able to even operate, they had to use their supply chain. So it's a very similar model. We believe Elon is the greatest entrepreneur of our lifetime, perhaps of forever. And so I find it very hard. And again, we use the VC lens. So when we invest in companies, we also look at the characteristics of the founder. In this case, one of the reasons why we invest in SpaceX so early was because of Elon, and because we saw that out of all his ventures, SpaceX is probably the one that's going to be the most successful in the future.
Fair enough. We got about 10 minutes or so left, so I do want to kind of go around the virtual room here. I know most of you have already mentioned one or two or even more ideas, whether it's been sectors, ETFs, individual stocks. But if there's maybe just one kind of takeaway, it can be a fund, it can be a sector, it can be a particular name that you're most bullish on. Somebody watching this can maybe do their research, and if it makes sense for them, add it to them. Jeff, I guess where would it be? Would it be utilities? Would it be something else here?
Utilities is one. There's a few sectors: staples, utilities, and bonds are kind of the worst sectors that we're in. We picked a basket. Kevin, what was the stock you mentioned? It was AEP, right?
That's correct.
Yeah, that's one of the utilities we picked. We were looking for. There's a handful of them that we have on the list. AEP was one of them, of stocks, utility stocks that were, either had some nuclear or looking at, doing something in a little more alternative energy. And also we just put out a basket of dividend stocks. Okay. A lot of staples. I mean, Campbell, Smuckers, McCormick, Hormel, a lot of stuff like that on there. Just worst months, dividend payers doing pretty well against the sort of chip runoff we've got, sell off we had here. But we're just kind of moving in. And also the short-term bonds, we like to park cash in, SGOV and SHV. I'm in those. But, it's kind of a little prepare for that fatter pitch, the sweet spot coming around Q4. And if we hit that ceasefire gap, it'll set up real nice.
Sounds good. Kevin, I mean, Jeff's here stealing your names, right? So I feel you're at a little bit of a disadvantage here, but besides AEP, what's maybe one or two that, again, of all the names you've mentioned, or maybe something you haven't, you're most excited about here?
Yeah, I'm just going to add on to what Jeff said. He's a very smart man. I do like the utility sector, especially for those investors who are a little bit fearful that there's more volatility ahead, but they still want to take part in the AI revolution. Clearly, utilities fit the bill and check both of those boxes. And Mike, these aren't your father's utilities. Yes, they hold up well in the face of volatility. Yes, they generally pay good dividends, but now they've become a backdoor play into the AI revolution. So I think about a couple of additional names that also have exposure to nuclear energy. Nuclear energy isn't the future, it's the present. And when it actually supplies 19% of the electrical capacity in our country today. So how about a nuclear name like Duke Energy? They own and operate 7 different nuclear sites today in North Carolina and South Carolina. Or NextEra Energy, which owns Florida Power and Light, which owns and operates 2 nuclear sites in Florida. So I think those are some opportunities that investors can consider. They're not always the sexiest sector to talk about utilities, but I think it's very well positioned here for the balance of this year.
I think making money is sexy. So if it's utilities, I'm okay with that.
Should put that on a bumper sticker.
For the record, those 2 are also on our list.
Nice, Jeff.
Great. I have to get you guys to something. I don't know. Jeez. Danielle, how about you? You've mentioned some other ideas. Anything that really stands out as being a great opportunity here, and why? 1 or 2 names.
Yeah, I found a couple names when I was working with my software last night. I got a Sterling Infrastructure, STRL. This ticker gapped up 37% after earnings last quarter. It's gapped up multiple times in a row, and the average pre-earnings move in the 21-day time frame is 15.9%. And it's going to be entering that pre-earnings time frame on July 1st. It's pulled back. It's in a squeeze. Consolidating really well, has a 4 out of 5-star ranking using my system. So that one looks pretty good. Also, Bloom Energy is one that's definitely on my list. This one has a 4 out of 5-star rank. It has a squeeze. Last quarter gapped up 22%, and that was after after the prior quarter gapping up 12%. The quarter before that gapping up 14%. So typically when you have 3 big gaps like that after earnings, and then you come up upon the next quarter, people are buying it. So it has a pretty high average move before the earnings report. On average, 23.5% during the 21 bar time frame over the last 2 years. So that's some pretty crazy volatility and pretty crazy movement. So these are some tickers that I'm looking at, before earnings. Definitely I'm not I'm not lacking for volatility over here.
No. But don't sound that way. Kev, what do you like here? I mean, again, same thing. Anything that really stands out as a great opportunity based on what you're seeing?
Yeah, I mean, I talked a few in terms of the AI space, but one space which I feel like is not getting a ton of attention right now, but has been performing really well is entertainment. And there's a couple of stocks within entertainment, specifically Sphere is one that I would point towards. I think it's gone very underlooked, but Sphere is up 67% year to date and 300% in the last 52 weeks. It has become a staple and an icon, obviously, in Las Vegas, and they're looking to continue to expand. The management has done very well. They also have Madison Square Garden, which that stock has done incredibly well, especially with the Knicks run. They're up 41% year to date. So Sphere is one that I would point out from an entertainment perspective that is been doing really good when you look at the underlying numbers. And then one other which hasn't moved a lot in the last month, but or specifically this year is actually down 4% year to date. But when you zoom out, has done really well is TKO, which owns WWE and UFC. UFC just had one of their biggest events of all time on the White House lawn. TKO, it didn't really move off of that event too much. It is, like I said, basically flat this year, but they're continuing to expand. They're getting super popular. They have, more viewers than ever. And so that's one where I'm pretty bullish in the long term on that one as well, and do have a position personally. So entertainment, an area that I don't think a lot of people are looking at right now.
Okay. Ava, I know you're not making stock recommendations. Oh, I'm sorry. What was it, Jeff?
Who's been to the Sphere? Anybody in this group?
I have been to the Sphere, yes.
How many times?
I've gone once. I went for the main show that they do, the dinosaur one, but I also don't live in Las Vegas, but I'd be down to go again. I thought it was a great experience.
I saw The Dead twice.
Oh, really? I'd love to go. I haven't yet had an opportunity to. It's either been shows that were already sold out or astronomically expensive or weren't really my cup of tea. But no, I definitely want to get there when I get a chance.
It's pretty special.
Yeah. Ava, again, I know you're not making stock recommendations per se, but are there anything else in the portfolio, anything else that you would talk about besides SpaceX that looks promising based on your research and is something people should at least do their own research on?
Yeah, you guys mentioned AI CapEx. This is something we're looking at. The guidance of the 4 hyperscalers, Microsoft, Google, Amazon, and Meta, for total CapEx in 2026 totals about $680 billion. So we're looking, and this is not going to benefit the whole index. It shows up at headline AI names. So we're looking at names such as Astera Labs or Arista Networks. Astera Labs for connectivity chips inside the racks, or Arista Networks for switches that connect the racks. So these are the companies that are what we call the front end CapEx capture. So they're the ones that get paid first. So every new, for example, every new AI cluster built by Microsoft, Amazon, means more orders and more revenue for these 2 names. So these are 2 names. For example, Astera Labs is down today, but it's been both of them are significant weights in the XOVR ETF, but both of them have done amazing, and I still believe in them for the future because of all this expenditure in AI capex that we're seeing.
Okay, great. Well, we're getting towards the tail end of this conversation, so I do just want to remind everybody, if you're watching this, the reason we're all gathering here together, we're fortunate at Money Show. We've worked with all of these experts here they're listening to, and actually, except for Ava, she's a new speaker. We're excited to have her in Las Vegas. The event is the 2026 Money Show Masters Symposium, Las Vegas. It's July 19th to the 22nd at Caesar's Palace. We have this year, we actually added a pre-show event the first day on Sunday. He's not joining us on this live stream, but Tom Sosnoff, founder of Tasty Trade, and will be there. He's going to be doing an options trading session, kind of casual. We'll have pizza and beer and talk options for a couple hours on Sunday. He's going to be doing live trading on Monday. And then the gentleman, or the people that we have here, we've got Jeff talking about the AI super boom, how to ride the next leg of the secular bull. We've got Nancy, who was on earlier and unfortunately had to step off. Her presentation is called Concentrated Portfolios and Fundamental Research Can Beat the Market. We've got Kevin with the topic Follow the Money, so that's going to be interesting. Ava with the SpaceX opportunity. And Danielle's doing a couple things here, as are the others, but her one main topic that I want to highlight is Master the 5-Star Setup, Power Up Your Options Trading. Again, whether you're interested in trading options, stocks, crypto, or really learn more about alternative assets and private investments, we've got people that can talk to that, can explain the benefits, why it might be something you're looking into, and really what's going to be happening with this market in the back half of the year. So again, you've got the URL on your screen, or LasVegasMMS.com. Simple to go to. Remember that for Money Show Master Symposium. And look forward to seeing you all there.
Thank you.
Mike.
Well,
Thanks,
Ron,
everybody.
thank you. Thanks everyone for tuning in. Appreciate everyone for being a part of this. We're going to close this out now. It'll turn into recording. If anybody missed the beginning and you want to watch back, you can just go ahead and do that now. Appreciate everybody. Have a great